Hello, everybody. So, what a great turnaround story that we are seeing with C Limited. This is why you can't look at stock price, because if you look at stock price, you would believe it's just bad news for this stock. But no, it's amazing news. I am so happy to see what I saw. So let me tell you a little bit about C Limited and let me give you a heads up. I bought the stock today. I'm so happy with what I'm seeing. So they reported their Q3. As you know, in my view, the most important part of a stock is product adoption, service adoption, is their platform getting adopted, and growth is back at C Limited. I am so happy to see this. The quarter-over-quarter growth was a 6.95% from Q2 to Q3 2023, right? I had to go back in the Q2 report. They should really highlight on their report that quarter-over-quarter growth. This is so important. This marks a change, a pivot in this company's growth strategy. This company growing quarter-over-quarter at 6.95%. It means if you annualize that, if you take that growth rate and make it an annual rate instead of quarterly rate, you get a 30.80%. Let's call it 31% annualized revenue growth, right above my 30% threshold. I am so pleased to see this. So the financial services division that you see in light blue here, and the e-commerce division that you see right here, have never been the problem for C Limited. You may remember my negativity about the stock. This negativity was all about gaming. It was all about gaming. Gaming going down and them not investing. There was a turnaround in gaming, which is so good to see. Look at the gaming revenue, which is the dark blue right there. Gaming revenue went from 529 to 592, which means that they have lost their loss leader. Their declining division is no more. Their declining division is showing growth again. And here's the best thing. India is not back yet, right? Free Fire is still not allowed back in India. We don't know when it's going to come back in India, but we know they had problem with data privacy issues. It's probably going to take, another bit of red tape before it gets announced again in India, but we still have Free Fire returning to India coming up. So this is amazing. There's a turnaround in gaming. I am so pleased. I can now look at this stock and invest in it. Now, let's see what else I love about this stock, which is what the market seems to hate. But the market is, I don't understand the market, honestly. That's why I always say no investment about just entertainment, because I can't understand. This market makes no sense. So this was the last time I covered C Limited. I had complaints. I was criticizing. This is what I said in Q2. This is from my clip in Q2. I said, this is awful, right? Why are we having 510 million of adjusted EBITDA just to pile cash? What are we doing with that cash? Are we going to have a dividend? I was being a little facetious here. Are we going to have a dividend? Like there was a $1 billion delta between how they grew in Q2 of 2022, which is what I used to love, right? You invest heavily in your growth, right? They were investing heavily in their marketing to grow the business. The market started crashing. This company stopped spending in marketing entirely, to the point that from last quarter to 5 quarters ago, they have a $1 billion delta in their expenses. You can barely see the expenses that they had. Let me show you. This were the expenses they had. You can barely see minus 7.2 and minus 9.5. They had almost no expenses in their growth in Q2. So I was mad. I was like, what are you doing? You're just piling cash? Cash is devaluing so fast. Anyways, let me show you now. This is stunning. This is great. I love it. This is now, they are going back to spending. They are going back to spending. So you can see this was their positive adjusted EBITDA, for the gaming division and for the financial services division. The light blue is financial services. Darker blue is their gaming, their Garena division. You can see highly cash flowing. And what did they do? They took all of that cash and they plowed it into the e-commerce division. So they invested $346 million in their e-commerce division. So that means that the e-commerce division lost money again. They invested actually quite more. Remember, the e-commerce division was making money before. So if you do the delta is more like almost 500 million. They've invested hundreds and hundreds of millions of dollars in the growth of their e-commerce division, which is why it's showing negative EBITDA in the e-commerce division, which I love to see. That means they're investing in their growth again. I love to see this. And this is why I love to see this even more, which, by the way, they are cash flow positive, but it really doesn't matter to me at this point. Let me show you why it doesn't matter to me that they're cash flow positive. I don't care that this company loses money this day. This is why. This is how much cash. This is how much cash they have on the balance sheet, right? Nearly 8 billion. Nearly 8 billion. They have nearly $8 billion of cash on the balance sheet, right? That they've accumulated. What are you doing with that $8 billion of cash? Well, now they are just flat from a cash flow standpoint, a slight 35 million of positive adjusted EBITDA, which is my proxy for cash flow. To me, I would have no issues seeing them posting negative EBITDA going forward. I don't have a single issue because look at the cash pile that they have. Look at the cash pile that $8 billion, right? That's many, many, many years of heavy investments in marketing to grow the top line. I would love to see this business grow the top line. And this market gave no credit to this company for being profitable. And now this company is going back to growth, and the market is still giving no credit. But I believe over the long run, this market will give credit to this company for growing because we're going to get back in a growth environment. This is the letter, the shareholder letter. Here's what I love. Focus on the long run again. Focusing again on the long run. And they say they have 3 priorities in general, right? Growth, profitability, and market share gain. In the current period, they prioritize increase in market share and market leadership. Do you see profitability in there? No, they are not in a period where they say profitability is the goal, which it should not be the goal. When you have 8 billion of cash in the balance sheet, you should not be trying to go out of your way to pay taxes right now. You have all of this cash on the balance sheet. Use this cash to grow. Have losses. It's okay, right? Read this too. Our move to self-sufficiency and profitability in the past quarter has significantly improved the cash reserves. Yeah, for sure. Way too much cash. And now we see a very good opportunity to build our e-commerce content and to grow their ecosystem. And they want to get into live e-commerce, and this is very popular in Asia, like live e-commerce when you have a presenter selling products live. They want to invest a bunch of money into there. That's wonderful. And of course, with a cash position, they don't have a need for external funding. That's obvious when you have this much cash on the balance sheet. So I don't know what happened, quite frankly. They made a mistake. They stopped investing in their growth. They thought the market would reward them. No, the market punished them anyways because this market makes no sense. So now they're going back to their old way, which was growth. They should have just kept investing in growth, in my view. Right? There was no point to halt all of this investment. That's why we had flat revenue growth numbers, because they had halted all of the investments. But no, they got to invest the money. I'm very happy to see this. And this is clearly signaling to the market, expect more gap losses. Expect more gap losses. Gap losses are not going to be a problem when you have $8 billion of cash on the balance sheet, They could lose $1 billion in gap for all I care. That'd still be 8 years. Now, I don't think they're going to do that. I think they're going to try to stay cash flow positive. But they don't have to. And frankly, they should just invest in the business and grow the business. This is how Amazon grew to such amazing size, right? Amazon made its first profit in 2013, right? They had well over a decade of growth before making their own profits. So I'm very happy to see them fight again, which is why I bought the stock today. Garena is not a problem anymore. This is amazing. The bookings are slightly up. Right? The quarterly paying user ratio, over the past 3 quarters, you really can't read too much. This is within a margin of error around between 7.5 and 8. You can't really read too much into this, right? Right? The number of users flat. So this is a flat to growing division. And I think this is going to be a growing division because Free Fire is going to come back to India. We're very secretive about that, but Free Fire is going to come back to India. Quarterly active users, when they go back to India, it's going to shoot up. India almost has 1.5 billion people. This is going to shoot up as soon as they get right back in India. But one could argue they don't even need India because look, Free Fire is number 1 worldwide in mobile games. It's the number 1 mobile game. And I listened to the call. In the call, they talked about League of Legends, Legends of Valor, Valor of something, another game of them that is actually growing in popularity in Asia and around the world right now. I'm sorry, I don't do gaming. I would be fine with this company not having the gaming division, but as long as gaming is growing, that's fine with me. Keep growing the gaming, that's fine with me. That's positive cash flow you can use to and then invest into your e-commerce division. So I was so happy to see that gaming is not a problem for this stock. So I bought the stock today. Losses are fine with me. You don't pay taxes. This is a company that has 8 billion of cash. They were still a little positive, 35 million adjusted EBITDA. My proxy for free cash flow. I'm fine with them losing money and spending and gaining market share. And you saw their marketing expense, right? Plus 12% year over year now at $918 million in marketing that they spent in Q3. Now's the time to spend even more. I would have no problem with them spending much more to grow the business, especially as TikTok was banned from Indonesia, especially as they may have an opportunity in Brazil. The main player in Brazil, Americanas, went bankrupt, and of course I have exposure with Mercado Libre in Brazil, but C Limited, they exited Europe, but they still have a hope of being a number 2 player in Brazil. Invest in that. I'm very happy, and the market makes no sense. Look at this market, no sense. Minus 25% for one of the most amazing turnarounds that I've seen out of this year. And by turnaround, I mean a growth turnaround, which is what I care about. I invest for growth. I love this turnaround. This was a company whose revenue was almost flat. And now quarter over quarter, if you analyze that, you had more than 30%. So this is great. And I've inputted it in my spreadsheet with a new enterprise value, with a new cash, and with the decrease in their market price today, right? If you go from before the trading hours to today, in 2 days, roughly, they lost minus 25%. So the enterprise value right now is $19.25 billion. They have a little bit of debt, right? Not all of that cash is net cash, but $19.25 billion. That's their enterprise value. The revenue is 12.9 billion is the revenue. So enterprise value over sales is 1.49. That is dirt cheap right there. Enterprise value over gross profit is a 3.45. That is also dirt cheap. And in the way I calculate stock now, they are at a 0.11. So each percentage point of forward growth, which I now estimate at 30%, you're paying 0.11. Now that is stunning right there. That makes this company, of course, as always on this channel, I always say it's not as cheap as Hims, not as cheap as Stone Co. But for the e-commerce space, it's pretty cheap. And it is the third or the fourth cheapest out of all the stocks I analyze as far as how much am I paying for that forward growth, as far as that question that I try to answer, which is, my metric is enterprise value over gross profit over revenue growth. I try to answer how much am I paying for that future growth. It's the third or fourth cheapest stock right now. And with the market being up like crazy today, imagine the opportunity, imagine the delta. The stock is down 22%. Other stocks are down 6 or 7%. Great opportunity. So I love C Limited very much right now, and I am pleased to say that I'm back in the stock. And I'll be seeing how the market reacts and likely add more. So this was not investment advice, just entertainment. Hoping you were entertained. Appreciate your likes, appreciate your subscribes. Thanks for watching, and have a wonderful day.